Earlier this week, Saudi Arabia pledged to make more cuts in its oil production. So does this mean we are going to see further recovery in the price of West Texas crude? Hello, I'm David Jones from Capital.com. I thought we'd do an update on the West Texas crude oil price. So in this video, we'll take a quick look at some of the recent moves in crude oil, come back, talk about the factors driving it, what's happened recently, what to look out for, including the big levels to watch during May. Then we'll jump back onto the chart and look to place our trade. As usual, if you're watching this and you haven't subscribed, if you can subscribe, support the channel, and we'll continue to push out lots of content like this in the months ahead. So here's our West Texas Intermediate crude oil. This is our cash market, our rolling cash market. We did do a video on Brent futures market last week. So you might want to watch both of these for the oil market. But here's the move we've seen over the last few weeks from $10 in the cash price up to trading at $26 now. So clearly, up by 150% since that low in the third week of April. Good bounce back, but if you look at the trend for this year, is still definitely down. We go back to those highs, seem a long way away now, $65 a barrel highs in early January on that military action between the US and Iran. But that trend still firmly down. Lots of obstacles, I think, on the way up from here. Let's take a quick look at the short term. So over the last, 5 days or so, pretty sideways. As you can see, down at $24, up here at sort of 27.50, stuck in a range, bit of excitement, short spurt on this Saudi Arabia cut news. But I think there could still be an opportunity, even though it's in something of a tight sideways range. I'll talk a bit more about what's driving oil, then we'll come back and look to get our trade on. We'll go back onto that in a second and get our trade placed for May. Just a quick one about a couple of new contracts that we've launched in the last week or so. We all know that crude oil went negative. The front month of West Texas crude went negative, and this did cause some problems around the world for brokers having to deal with a negative price. So we've introduced two new markets, Brent crude plus 100 and West Texas crude plus 100. It's basically the price for those specific oil markets plus $100. So if crude is trading at $25 a barrel, the plus 100 market is trading at $125 a barrel. If crude goes negative, let's say it goes to minus 50 a barrel, then the plus 100 market will be trading at $50 a barrel. So it's just a way for our clients to continue to trade these markets if the prices do end up going negative again. I just thought I'd mention that quickly. So let's get back to West Texas crude. Of course, we had this unprecedented negative price for the front month contract for crude oil last month as the storage costs mounted up and demand had fallen off. We actually saw it trade down to about minus $37 a barrel, first time in history. We have seen demand start to creep up over recent weeks as lockdown restrictions are gradually being lifted in economies around the world. Goldman Sachs reckons that world demand for oil has increased by 2.5 million barrels per day since the absolute low for demand back in April. Of course, we had those agreed OPEC cuts that kicked in at the beginning of May. But earlier this week, a surprise announcement from Saudi Arabia saying it was going to make further cuts to its own production. So Saudi Arabia said it's going to cut by a further 1 million barrels a day. That's going to take its production down by about 40% from where it was in April. So again, you think, well, but we're seeing perhaps a rebalancing here of this supply-demand imbalance that we've had for much of this year. So you'd think, well, actually, with further cuts, are we going to see a surge in the oil price? We did see the price move higher, but hardly surge. And I think perhaps some people are thinking, well, are the Saudi Arabians, are they seeing even less demand for oil than we think is out there? So is it a knee-jerk reaction in a continued lack of demand for oil? We will see how it plays out over the next few weeks, because I think markets are still cautious about the threat of a second wave or a second spike in the virus, forcing lockdowns to be reintroduced. There is so much that is still unknown about the next few months. Clearly, we have very gloomy economic predictions for the world economy, and no one knows if they are too pessimistic or not pessimistic enough. So it's perhaps not surprising we are seeing plenty of markets around the world taking a somewhat cautious tone. But I think there are opportunities in oil. Let's talk about the levels to watch for West Texas crude. Then we'll get on and place our trade. So the price is a bit trapped over recent days between $27.50 on the upside, the recent high, and about $24 on the downside. So we've got about a $3.50 range that crude has been trading, and then we have the more recent highs and lows forming support and resistance. But to put some colors on these numbers and set up a trade, I'm going to set a trade up, I think, based on a breakout, because I think we are going to see a breakout in the next few days. That's the trade I'm going to do. Let's get onto the chart and place it. So just very quickly, these are our plus 100 markets. So if you're a client of ours and you put oil into the browser or the app, it comes up with various things that match that. And these are the plus 100. So you can see our crude oil, the West Texas, currently trading at $126 a barrel. That is, of course, the current price plus 100. And there's Brent below that, just so you see where they are. Let's take a look at West Texas crude. So this is where we are. That trend from January is still down. We've seen a strong bounce back. I think we've got, lots of problems just a bit above where we are now, running from sort of these highs here, early April in the cash market, 32.20, up to this high after the gap, 11th of March highs up around about 36.50, 36.60, that sort of area. So looking at the trend, we could see it squeeze a bit higher from here. But I think there are plenty of obstacles in the way. So I think, medium term, let's not be surprised if we see oil start to roll over again. Looking at the indicators down here, the last signal off the RSI we had was oversold down at those lows, third week of April. Hasn't quite got to overbought on the upside. The last MACD signal we had was on the way up on the bounce, April the 30th. The MACD histogram is slackening, rolling over a little because the market's been so sideways, but not too much for the indicators at the moment. I think it's going to be interesting from here because that trend is still down and because so much is still unknown about what economies look like. But what I'm going to do for a change, I'm going to place a really short-term trade on this. So what I want to do is just focus on the past week or so. So we're going to take this down to a much shorter-term chart. So here's the hourly chart of crude oil going back to the 5th of May. Pretty sideways range, a bit of excitement now and again, but overall just trading in this wide range, support at 24, resistance at 27.50. Not much from the indicators. That at the time of recording, the indicator, the RSI, has gone overbought, which isn't surprising because we've seen the market push up from $25 to $26.20. So the trade I'm going to do, I don't think there's much point in doing a trade here because the market's sideways, but I think we're going to get a breakout. Markets don't trade sideways forever, particularly oil at the moment. So the trade I want to do is to take advantage of either a break through these highs, 27.50 highs, or a breakdown through the $24 lows. So I think if we see a breakthrough there, we could see a bit of a continuation in the direction of the breakout. I'd probably prefer a breakout down, if I'm honest, because that big trend since January is still down. But what I'm going to do is place some orders. I'll place an order to buy if it gets to $28, and I'll place an order to sell if it gets to $23.50. So what I want to see is a breakthrough, at least 50 cents through the high or the low, and I'll put the trade on accordingly. As this is a pretty short-term trade and we're in something of a tight range, I'm going to have a fairly tight stop. We tend to have quite wide-ish stops because it's a volatile market and we trade over days, usually for these videos. But I'm going to have a stop $2.50 away on each of these trades. So let me just set them up and I'll talk through what we're doing again. So the first order I'm placing, you can see it on the chart up here, but I want to buy 99 barrels if the price gets to $28. If it gets to $28 and I end up buying, put a stop in at $25.50. So if it breaks out, I could actually even have the stop tighter than that, but I don't want to see much of a pullback back into that range. I want to see this breakout really follow through. Let's place that. And on the downside, the trade I'm setting up is to sell if the price gets to $23.50. So as it falls below 50 cents below that old support, if that trade gets filled, put a stop in at 26. And it's $99 in both, 99 barrels in both examples, because that gives me a risk, our usual risk of £200. So let's place the stop order. So I think these are interesting orders to place because the market is stuck in this sideways range. You can see my orders now bracketing the market. So I'm saying I don't want to do anything, but I'm going to take a breakout and move 50 cents out of that range as a valid break and look to jump on board and see if we get some real momentum in the new direction for oil. If I go to the portfolio, we don't have any oil trades on at the moment. The two stock trades we did, we bought BP 23rd of April at £3.13. That's slightly in profit. But the trade that's made a really good return for our risk of £200 was selling short Frontline. If you watch that video on oil stocks, that was one of the tanker companies, Norwegian listed and New York listed. I went short thinking that perhaps the share price had got a bit ahead of itself in the lack of storage for oil. Went short at 117 and it's currently trading below 80. So we moved the stop loss down to 90 on that to lock on some profit, but that's delivering good profit so far. And here are these two orders I just placed. So if oil gets to $28, I want to be a buyer with the stop $2.50 away. On the flip side, if it falls out of the range to $23.50, I want to be a seller and sell short oil, expecting further falls with a stop $2.50 away on that one as well. And whichever order gets filled, I'll cancel the other order and we'll see how it does in a future video. But fairly sideways at the moment, not that exciting, but that big trend is still down. So I do think that perhaps medium term, the risk is for further weakness in the oil price. We'll see how it plays out. We'll see what happens over the next few days, but that's it for our update. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.